I don't think we're going to go through a long introduction. I'm just going to let you know who everybody is, and as we go through the discussion, people will explain relevant bits of their CVs and what they're doing now. But what I want to start by saying is that I'm really excited about this. I think you should be too, because having spoken to and looked at the careers of the people who I'm on this panel with, I literally couldn't think of better people to ask about this question and to really bring to life in a business context what we heard earlier and what we saw earlier in the demo from Jake Bailey, Mark Tuckman, and the rest of the Acrisure team. So we have with us Matteo Carbone, founder and director of the IoT Insurance Observatory, Ben Funk, Acrisure's Chief Technology Officer and Chief AI Officer, Neil Keeble, Senior Claims Adjuster for Fidelis, the Fidelis Partnership, Spencer Mitchell, CEO of TrackCloud, Chris Moore, President of Apollo 1971, Mark Tuckman, who you've already heard from, but you'll hear from again, Senior Advisor at Acrisure and the sort of godfather of everything here today.
At least he didn't say great.
Much nicer than what my wife usually says.
I suppose the only thing I'll say from my job is my name is Ben Aflami, Head of Strategy at Acrisure. The only thing I'll do just to frame this up is a bit like the question I asked from the floor earlier, which is, what's the relevance of all this? Like, why does this matter? Why are we even here? Why are we talking about it? Why has all this time and effort gone into all this? And the reason why it matters is because the experience that a client has is the core thing that every single person in this industry always needs to think about. Sometimes, like in all industries, you can take your eye off the ball of the core thing. You end up becoming obsessed with finances or technology as an end in itself or whatever it is. But why I absolutely love this and why I'm here today is because this is all about improving the client experience. And just to pick up from what Jake Bailey said earlier, it's about reducing the friction of the transmission of information that can help the claims process work much better for the people we're meant to be serving. So that's really why this really matters, and shortening the life cycle of the claim have such a positive impact in that regard. So really, just to kick off, I'm going to start with Ben Funk, our Chief Technology Officer. But for those of you who don't know, Ben joined Acrisure probably, I want to say 6-7 months ago. Came from Palantir, where he was one of their leading their leaders in financial services and insurance, and so has got experience not just at Acrisure but across the industry. Ben, how do you think AI really impacts an efficient claims process?
That's a good question. Look, I think there's probably two ways to sort of think about the space. I think the first, I'll allude back to something I sort of said a couple of days ago in another sort of forum. I think you have to take the sort of AI frame as the first part of the shape of this question, right? It's like, where are we today in the state of AI? One of the most amusing pieces, I guess, of my week is basically waking up to a set of news that just fundamentally rocks the entirety of the AI sphere. Like the pace of AI is moving so quickly that if you take a 7-day holiday and you come back, like it's just a fundamentally different universe in the way you're thinking about applying tech generally in the world, let alone to a specific part of the insurance process. And I think when you think about sort of the state of AI today, we have gone through many different larger macro iterations of what you can do. The first of that in 24 was a version of sort of broad strokes content creation, communication, interaction, chatbots, things that we all sort of saw in the retail space. In 25, that evolved closer to the space of sort of agents and the way that you can sort of autonomously tackle certain pieces of operational value chain. And I think in the last months since Christmas, really, there's been this really strong push into the space around agentic systems and sort of agentic harnesses. And when you're in that world, the question of like, what does it mean for the claims process is one where when you apply a lot of those agentic systems to bear, you can go extremely far down the space of what and how can you tackle that operational process entirely end to end. And so when you think about the broader sort of efficiency around the claims process, the key piece of this is that focus on marriage across every single operational step in the value chain. I think Jake's demo sort of speaks for itself. You're uniting all of the intake, multimedia you have, all the extraction that's necessary to sort of pull out the key information, the enrichment that's necessary to be able to step through and sort of understand what's being submitted. And then at the end of the day, the sort of swivel chair orchestration within and amongst an org to basically get to a conclusion. Adjudicating on a claim is like the key decision there, but the process of it is actually making the cycle time over one of those steps smaller. And so I think what we'll start to see as more and more organizations or enterprises adopt sort of agentic systems around the agentic space, the more that that overall sort of efficient claims process will be grounded in really collapsing the sort of middle stages along the way. And I think, like, in a nutshell, I know claims are an instrumental part, and adjudicating those claims are an instrumental part in making sure that there's an efficiency in a broader company when it comes to performance. Like, I'd sort of go as far as saying that speed in that broader process is going to become a way that we sort of measure institutions on not just their loss ratio, but the sort of cycle time of being able to deliver these sets of processes, the core ones, the end-to-end ones, the agentic engine ones. That's going to sort of differentiate who has an efficient and inefficient claims engine. And that's going to be driven by the winners and losers, and the winners will be the ones that do sort of AI enrichment here, in earnest and in depth.
Great, thanks, Ben. And Neil, I mean, from your position at Fidelis Partnership, what are your thoughts on what Ben has said? Because obviously, as a claims adjuster, you're such a key part in the chain, so to speak. How much of a difference from what Ben has said in terms of, frankly, shrinking the time, right? How much of a difference would this make to your job and your business going forward?
Firstly, it means I can probably retire early. but no, when I first started, it was all paper based, and it would take you several weeks to get a claim even notified if you queue up to see the underwriters here in the Lloyd's building. Whereas now, time is of an essence. You're here to sell insurance and an insurance policy. You won't be able to sell that if you have a bad claims experience behind the scenes. So the quicker we can handle and deal with claims in the right way, and the quicker we can get insureds back to where they were before the loss, that makes all the difference. So I've seen losses that will take several years to come to completion, with lots of angst from the insured as to why it's taken so long, and others which are complicated, but we've done it in a short period of time. And technology will help that. As I say, I come from a paper background, but I'm getting used to the idea that we need computers and everything like that. When I started, we had one computer between 6 people originally, because computers weren't a thing then. But now I can see that AI and the data that you can generate will help us and help underwriters write the right business.
So look, that point is so fascinating, because I think when we debate whenever people debate AI or technology, we should always remember that data is really, really key as part of that, as is the agency of the insured as well as the insurer, right? So this takes me on to Matteo, just thinking about telematics. And when you're thinking about drivers, in cars, whether they be trucks or any sort of commercial vehicle, how do you get the driver to embrace and benefit from telematics, bearing in mind that point we were just hearing about data, bearing in mind that speed is essential? We are going to need the insured to also play a part in this. So what's your sense of that? And from your standpoint, what have you seen in the market?
Sure, there is one element that directly linked with your question, that is the possibility to have an outcome that is more fair than what will be the outcome without having the telematics information. So driver exoneration is something that is already happening. There are already companies that have designed processes to use the video recorded by a camera connected with the insurer to prove that what a third party claimed is not the reality. But I think that everything we have seen today have one additional aspect that I talked about these possibilities for more than a decade. But even a tool that is working well until it's not integrated in the other processes doesn't deliver. So the tool we have seen today have a clear difference from a telematics-based claims because it's integrated with the workflow of the TPA. This make achievable the dream to have a telematics-based claims. If not, you have the data, but the data are not operationalized, are not really used, because the tool stay there and is separated from the way that the claim handlers work daily. This way, instead, is everything integrated.
So with that question around integration, Spencer, if I just come to you, how do you see that, particularly around telematics and indeed in your business?
I think the return on investment for an insurance company in their telematics program is ultimately going to come down to how well they do that integration, how well they use the systems. So we have a lot of a good number of insurers today, especially in the program space, who require telematics to bind a policy, maybe even to underwrite a policy. I would say that on the insurers, the programs who are using telematics most effectively they're using data for underwriting. So they're trying to get the data beforehand. They're using it in the underwriting process. We can go back and pull historical data. But two, probably the biggest ROI is what you saw today, which is the rapid notification of claims and the use of that to respond quickly. We've had cases where TPAs are, let's say they might get to 10 claims in the next year with a rapid response team, and they take that. Each of those claims could have been $1 million, and now they're $85,000, so the cost of a Toyota Camry, and maybe 2 Toyota Camrys or something of that sort, as opposed to the neck and the back and those sorts of things. So the rapid response, the integration to the rapid response, like we saw today, where possible, is probably the greatest ROI, least lift as well. It's the number one thing that you can do. There's some other things that insurers are driving towards, these elements of continuous monitoring, which I know the wholesale programs are ingesting our data in such a way that they can see if there's a new VIN that they didn't know about on the policy, if they're running certain miles that they didn't underwrite. So this idea of then Mark was talking about, when you underwrite an account, you look at it one time. That's no longer the case with telematics data. You underwrite it, and then you get a notification if they're going to Mexico, going to Canada, running twice as many miles as you thought, adding VINs to the policy, or not adding VINs to the policy, but adding VINs on the road. And so all of those pieces of integrating the data, but not just the data, it's sort of like the signals, I would say, is the way that insurance companies are benefiting from that.
So on that, and I suppose it's a very simple idea, but actually it's pretty profound. You go from a model whereby, and I think Mark was saying it earlier, once in a year and then leave, don't think about, to effectively a constant process. Chris, just I'd be interested, what's your sense of how the agent can be more of an advisor to carriers with regards to claims management? Because if you're doing something on an ongoing basis, it actually means that the role of an advisor to a carrier presumably is greater, it's more intense, it's more frequent.
Yeah, I think we've been, it's IBOT, by the way. 1971 insurance.
Forgive me.
It's all right.
I should be more tolerant because people always pronounce my name wrongly. So I'm now feeling really bad.
That's fine. We insure some massive tech companies, right? So Uber and Lyft in the rideshare space, DoorDash, Deliveroo in the delivery space. We insure Waymo, the autonomous vehicle companies that hit the streets in London. They have tons of data. And so the importance of that claims data is obvious, right? If we can get out in front of things from an FNOL perspective, we can, try and prevent severity before it crystallizes. The bit that I find that is really missing is how you can use that data for that consultancy piece that you're talking And I don't mean the consultancy piece just to the claims team. Like the claims team is the bedrock of the information that we need within an underwriting ecosystem. And if you want to be an elite underwriting business, not an elite underwriter, you need that claims data to feed into your underwriters to say, here are the trends we're saying for a better risk selection. You also need that to feed into your actuarial pricing so they can be more active and do things. That feeds into reserving. And then there's an added layer of we feed that consultancy to our client. Now, a lot of insurance companies are set up in a way that that's almost impossible, or it's really difficult. And I think AI and better data sharing will change that. But even in a Lloyd's environment, our claims team don't often sit with our underwriters. And so it makes those feedback loops really challenging. If we're in the US, they're probably not in the same state, which is even more difficult, right? You've never probably met the claims person that's handling your claim. How are they going to pass you feedback loops on emerging trends for you to then go consult your clients about, hey, you can prevent things before they even become a claim? And Chugs, who looks after our occupational accident side of the house, we were working on some claims data, and we said to them, well, this is really deep granular exposure data that we want to overlay with claims and go on a process. And this is DoorDash, the delivery company, Deliveroo for anyone who doesn't know DoorDash in the US. And we got this granular data set in. We didn't want it quarterly because there's nothing you could do with quarterly trends. We wanted on a much regular cadence. So we went for monthly, just because it was a bit of a step for the broker to go from annual to monthly. And when we saw these claims come in, there was a huge amount of claims for dog bites, which sounds crazy, right? And we think that's like big numbers. And if you annualize what we thought this claims would be for dog bites, it's going to be about $5 million a year. Dog bites for the delivery drivers. So when we fed this back to the clients,
who knew?
Who were taking data and just feeding it back to them. Honestly, that when we were talking to them, they thought we turned water into wine. We said to them, there's an easy way to solve this. Surely you just build some into the engineering. So they did build into the engineering. As soon as you sign up now, it says, do you have a dog at the property? And then as soon as the driver gets out to deliver the burger, the salad, or whatever, it just says, hey, take 10 steps back. They've got a dog at the property. It went down to, I think it was down like 80% in a year. And we actually didn't have the OCAC account, so it didn't do anything for us. You can imagine the client, when you save them $4 million, that is a very, very sticky thing. That's a value in what we're doing with data and claims beyond just lowering your claims and your loss cost.
Well, I mean, that's fascinating. Weirdly, once you explain it, you think, yeah, that's really obvious. But of course, things are only obvious once they're explained. I mean, Ben, I think what Chris sort of very clearly outlined is sort of how we think about this as part of the broader operational workflow. And so how do you think that claims function should integrate into the sort of enterprise-wide AI initiative? Because I think that's always the difficulty. And look, as far as I see it, it's one thing to get something right in one part of a chain. It's another thing to do it across the enterprise. And I know that at Acrisure, that's your job. So how do you think about that?
Yeah, so I think a couple of things. So I think Chris is absolutely right. I think like the base case at probably every institution in the insurance chain, arguably the broader commercial world, not even group in all of government, there is just like siloed functional reality between the humans, first of all, right? So table stakes maybe base expectation that there's technical silos. There's also functional silos in the humans. So I think that one of the key challenges to a lot of these spaces, thinking even just outside the claims sort of pillar, is how do you look at the broader value chain of how the organization runs? Let's take our example here. In the case of some of the underwriting efforts that we do under the programs and the specialty programs that we tackle, we have to deal with both the claim side and the underwriting side and the customer experience side, and. The nuance is that I think the way you solve some of the functional silos, in my opinion, in my sort of 12 years at Palantir, is basically you have to start at the underpinned tech reality and give the organization an actual chance to be able to operate all on the same infrastructure, all on the same tech platform, all on the same data, all on the same sort of toolkit, in a way that naturally allows every individual in those functional silos to even collaborate in the first place. So I think putting people in a room and having a discussion is one thing, giving and putting toolkit into the hands that lets them share the data, interact on the data, do analytics on the data, build workflows on the data. Naturally, that's I think the need. So finding the right way to sort of build into the technical roadmap a way that all of those teams functionally have to be pulled together, it gives you even a chance. And for what it's worth, like I think that goes a step further on the AI side, because naturally, if you solve some of the functional silos between the humans and actually close the loop on feeding the claims data back to the underwriters, you can then be thinking about the right way that as you inject much of the AI and agentic frame into that they're doing the same thing as a scalable workforce alongside the humans. They need ultimately the same thing. They need a technical underpinning, they need a common data layer, they need an ability to build sort of systems across those walls. And if you don't sort of re-architect the human interaction there, I think you really, really struggle to get to a place where that changes. And I think that's true in a sort of individual institutions' walls, in our walls. I think that's also true as you start to branch out and do what, the description here around giving insight back to the client, thinking about the ways that you'd partner with other carriers or other participants in the market or other reinsurance organizations. Every one of those situations has the same functional gap of you can put the two people in a room and talk about doing a piece of business together. You have to have a technical underpinning that lets them collaborate. And so that I think that just broadens the expectation that you need that sort of common functionality.
Chris, how do you see that question? You explained very cogently how things could work better, how you've seen it, but it doesn't always. So I'm just interested as to just bring us back to earth almost a little bit.
Yeah,
I'd be interested to see sort of what you've seen, what you're hearing, seeing, ways where it's not working so well, how we move forward.
Yeah, for me, the first thing I'll always tell any of my underwriters in any new interaction with a client is, are we really sure the client's interests are aligned with that? And that has to be about reduction in loss cost. And if they are, I tend to find that data, they lean into that data, get a ton of data. And then if you've got the team that are going to embrace it, you can do something really amazing. So I know that in the insurance world, Uber can sometimes have a mixed reaction to certain people. Certainly if you're a company that has like a fast flowing water in your name, that's a tough risk that you've looked at, right? But as a sign of how aligned they will be with us reducing loss cost and sharing data, as just a rough guess, I know Brave in the audience, all on the panel, as of 1/1 this year, there's been a slight change in the law about UIM. What percentage of their revenue in LA do you think had to go on insurance? So if you had a $100 trip from in LA, how many dollars do you think went straight to insurance?
What do you think, Mark?
Not you.
Huh?
Mark, you want
He works for you. $4.
$4.
$42.
42.
$42. So 42% of their revenue in Los Angeles went towards insurance. So when I say to them, if you share me this data, I want it this granular, I want it every week. This is what we're going to do it. This is how we're going to align on it. I may use AI to bring out some like claims trends. They will lean right in. It's $42. You take that down to $22. It's huge, but you have to have that alignment. Some of the new risks we're seeing, I know we're talking about wheels, but we're having a flood of the AI developers. I'm speaking to us at the moment. And that is a tough one. We're having a lot of social media platforms approach us at the moment saying, hey, you've solved for a tech industry and wheels. Can you solve for this tech industry? The challenge we're having is, are our interests aligned? Because you just want people on your platform as much as possible. You got that addiction thing. I want to safeguard the people on your platform. Bit of a conflict there. So for me, it's about there's a risk selection of aligning interests with the client. And once that happens, the data flow, the data share can happen really, really naturally.
Interesting. I suppose if we go back into wheels in a bit more detail. I mean, Spencer, we talked about sort of telematics, and we talked about that and the importance of that. How do you find over time you expect your business to frankly be better if we use data in a different way going forward, rather than just thinking about how it is today?
As an insurer or as a fleet, from which perspective?
Ooh, and I should thought about that. I was asking you as an insurer rather than an insured, but I think you can maybe answer both.
Related to the use of, or or how you use telematics to make that business better. I think that coming not from an insurance background, but my understanding is maybe there's a common perception that 80% of the risk is driven by 20% of the insureds of the risks, and telematics is bearing that. We're seeing that right now in the models that we're doing. I've personally watched 11,000 crash videos in the last 2 months for our data models. We've got other people doing it, but I figured I could chip in while I'm watching a baseball game or something of that sort.
We could
You know, that's what Mark actually does as well.
Yeah.
He just does it for no purpose. But you actually have a reason to do it, so we forgive you.
I have a category on my TV. It says horror.
Yeah, yeah.
I'm pretty sure some of our devs could spend a little bit of time. We could get some agentic video watching there.
We could.
Yeah.
Claude can't do it yet. Gemini apparently can, but I don't trust it fully with this case. But the so what we're seeing, as we divide these, we're dividing all the trips into deciles and the risks and the vehicles into deciles, and really what we're seeing is 1 through 8 there might be 1 times lift, and then 8 to 10 has 3 to 4 times lift.
Okay.
And they're not terribly complex factors. A lot of times, I think some of the things that we're seeing that are contributory are they're sort of byproducts of something you might be able to observe more in a more granular way. So, for instance, a lot of times we don't use the video data like the drowsiness or weaving or these sorts of things that the camera is telling us the driver's doing, because there's a difference in what cameras observe. But you can see a correlation between those behaviors and speeding, for instance. And so if you just look at speeding as a variable and maybe you just segment on that, and you find that decile 9 and 10 is 3 times risky or 4 times as risky as deciles 1 through 7, those sorts of signals that telematics are driving or they're really making apparent for insurance companies. Now, I don't know that many insurers in the space are there yet. We have a lot of data to be able to start to parse that out.
How effectively, I mean, you've just, again, in a really fascinating way, explained some of the trends that you've seen, but how structured is that analysis of data in your company? Or is that just because
It's very structured.
Okay.
It's very structured at this point. With multiple data scientists looking at this, coming up with trip scoring, risk models. The conversation is to start to file these models. But the whole point is how does this data become more useful for insurance companies? I mean, it's risk selection and pricing, right? Because on the surface, you don't know how fast a fleet is driving without looking at their data. But once you start to look at it, okay, maybe this percentage of speeding over is not that important. But once you hit a certain threshold, it becomes very important. And that risk, and it can drive risk selection and pricing in a very way, as it has, I think, on personal lines. It just hasn't made its way to wheels so much.
So, if I may ask a question, actually, Neil, I'll ask you because of the sort of as the self-confessed paper-based man on the panel, and
I'm proud of it.
no, look, it's fine. I'm almost with you. No, it's fine. But if we think of not the insurer, and let's think of the insured for a sec, I just perceive a risk, and this is probably my ignorance, so tell me if it's completely wrong, but I perceive a risk that there will be a very small number, I don't know what that percentage is, who is currently effectively being underpriced because there are certain behaviors, activities in wheels I'm talking about now, if we think about that. And now insurance companies over time will work out that that price needs to go up significantly, and maybe a bunch of other people's go down a little bit. Correct in your judgment? And if it is correct, what do you do with the people for whom there's always a tail, and at the moment that tail is sort of subsidized? How do you think we deal with that?
It does affect it. It's interesting because you see various accounts that we have binders and what have you, and you'll see a certain trend, and you need to tell the underwriter of that trend, and they'll then change that. And if it means dropping the price somewhere or increasing the others to marry it up to make the profitability better, because that's what the underwriters want, is the profitability. And that's where we come in on the claim side to ensure that profitability as best we can. So if it means telling the underwriter, oh, you've got, say, a certain county or state in the US where you seem to be having an X number of losses, whereas in Y it's half that amount, you might want to readjust where you're writing your business. And Mark and I, we've had that discussion in the past on things where you can see there's an agent perhaps it's a lot ringing alarm bells, but then well, we need to adjust it. Mark needs to adjust it from his own point of view for the losses, to stop the losses. So it's keeping that adjustment and keeping the right value.
Interesting. And Matteo, what's your thought about, because obviously you've got a very interesting viewpoint across the whole industry more broadly. I mean, what's your sense of that? And I perceive that to be a problem. Maybe other people don't, but
let's say I have a lot of experience in answering to this question, because in personal auto telematics, the philosophical question of that 20% or probably 3% that are really terrible as driver, what the sector should do. So the question was, this will kill the mutuality. So I've answered that question for 10 years. So I share with the audience here about commercial auto the same perspective. I believe that if the insurance sector will become so good in evaluating risks that are able to identify these 2% that are so dangerous, is doing a fantastic job for the society, because it's telling they have to stop or they don't drive. That's all. They are out of the market. This is my answer to this philosophical question.
So,
Mark, please.
oh,
Are you in the 2%? No, I'm joking.
no,
It's just,
every,
Mark
yeah,
has said,
I am that 2%.
Mark has said nothing, and the moment he heard that, he really felt he had to come.
Let me confess one thing, Mark, before. I give back my license 10 years ago because I was dangerous. I destroyed 4 cars. I give back my license. I confess, I'm one of the 2%. But...
So,
We are definitely after this not going to anywhere near the same place.
I don't drive anymore. I'm not allowed.
Fully noted, and I respect the honesty and transparency there. Mark.
okay, I admit I'm part of the 2%. Sometimes, but anyway, and Bim has purposely not asked me a bunch of questions because we wanted to hear from a lot of the other perspectives, but you did ask one question that, and Matteo and you, I know I've spent an awful lot of time with both of you on the driver perspective, and I asked Chris to be on the panel for one real reason, is because I love his stories around claims. They're the absolute best claims stories ever. So, but the driver, and Bim talked about the insured, right? The driver's the most important element, and that, to me, until we put chips in them or we do some other things that are, we all might have them, we don't even know, but until we could really drill down to that part to get to the 2%, because I think it's like anything. It's a customer experience. You have 100 customers and 2 or 3 of them take up 90% of your time. Same exact thing. And so claims are great to talk about after we spill the milk and have to clean up the mess. And what Jake and what we're talking about here is to be able to do it efficiently and quickly and all the rest of it. But it's the whole preventative part of it where I think we then kind of take this, because all of what we're talking about is most important to the underwriters and the people that, remember the look back. Let's figure out a way to look forward if we can. So
Please go in.
Just on the back of that, going back to 38 years ago when it was a paper, you had a letter, you sent a fax or a telex, you had at least 2 weeks before you got a response and you had to deal with that case. Now you send an email, they're chasing you within 5 minutes. So there's that, and the element of data and everything is all part of the process. We've sped things up, so we've got to speed up as well.
Well, and data is also, there's the other side of data where it's going to hurt you.
Yeah.
And especially if you're collecting all this data and not doing anything with it from that standpoint as well. So
Just Mark, just one more question, because there is always an issue when a claim does happen. Exactly who owns that process and how you go forward with that, rather than exactly what happens. So we spent most of the time today talking about, what happens, the AI, the tech, the speed, who does what, telematics, etc. But within a company, I know within Acrisure, one of the biggest questions is, okay, well, how do you triage the process from a broker's perspective? Because, they work with all sorts of different TPAs. There are lots of different clients, deal with literally hundreds of millions of dollars of premium. How do you think that the technology that was showcased earlier on by Jake and developed within Acrisure can really help the management of the triage of this whole process in a more effective way?
well, I think one, it's great to be able to build and do what Jake is doing, but it's almost like, having a missile and putting it in the wrong person's hands, right? So we got to make sure that that tool and what we're building, we're putting it in the people's hands that can make the biggest difference, right? I mean, obviously, Neil, you're going to make a big difference there, right? I mean, but you're an afterthought. Sorry,
Yeah,
you're an
fine.
afterthought.
I'm used to that.
Yeah, but if we can take that data and then we can work with the insureds, right, and we can work with the producers, and we talked about an agent, we talked about how important the producer is in the supply chain. I mean, that to us, the way Chris Parkinson and myself and our underwriters look at it, they're probably the most important part of the equation, right? They make the most money for sure. What the hell? I mean, that's a whole other story where we look at the compensation that the retail agent gets, right? But are they actually giving the insured the advice that they need, right? So for kind of answer your question, this first notice of loss, this tool, it's got to sit within the underwriting, in our case, underwriting and specialty in the program space, because we're the ones that know the most about it. We underwrote the risk. We can answer those questions quickly.
Christian,
I would say one of the things that we've had to work on a lot, because I haven't seen many TPAs and building what you're building, is around severity. I think it's amazing if we can, increase the speed of claims, better FNOL, and we can manage claims in a better, and the customer experience is better. But most clients, the biggest fear they'll have is when they have one of these, right, one of these huge legal system abuse all over it. And so what we've been trying to build, because we haven't seen people building what you're building, is like a large loss identification tool.
Mhm.
So using AI to pull out all these characteristics, all these stuff. So you can use simple LLMs to look at the description if you've got an infant or you've got a high speed telematics collision at high, and a big impact. That was doing so much. But the biggest thing that we've seen in most recent weeks is if somebody changes their counsel, their lawyer, instantly that's a red flag. Is someone's bought your case. You've had a local lawyer who's picked up the case. They're the ambulance chaser. Then the big claims firms have their own AI tools that's scraping lawsuits to go, I can get a 20 million verdict on this. They'll go up to the plaintiff and the lawyer and say, I'll give you 5 million now. That's a lot to a lot of people. And they'll take the 5 million and they'll get a litigation funding for the 5. And they'll say that I won't sell for less than 20. Now, an insurer can stomach 20 million. It's not going to kill my insurance company. But if you're a trucking company, Midwest, and you've got a 20 million verdict in the public domain, all your contracts have been ripped up, it's probably put you out of business. And so some of the amazing things we can do is you can not only lower their cost of insurance, which is obviously impactful, but you can save their business by avoiding this legal system abuse. And that's why the tort reform in Georgia is happening, and you're seeing all these people lobbying, because I think the average American is realizing that the lawyers aren't working for us. They're absolutely out for themselves. It's crazy.
as a former lawyer,
No. I'm really glad.
I don't take that. I don't take that personally in any way. But
Plaintiff's lawyer, big truck.
I didn't do that actually. When I was a corporate lawyer, I never went into a courtroom. I promise. But look, I think the point you make around the non-linearity of risk is really, really important, because I think people think it's linear and it's not. It's like most is completely fine. Most risk completely fine, most of it, but then there's the long tail events. And so, Ben, I'm just really interested in your view on this, just from an actual perspective, indeed your own experience, elsewhere. How do you think businesses like Acrisure, with the data and information that we've talked about, and with the impressive tool that is now being developed, how can we work with our own clients to avoid those sort of massive tail risks in the way that Chris was talking about? Someone's business can just be completely blown up by one of these things, and indeed other things. So how do you think about that, Ben? Because I know you love data, algorithm, maths.
I think there's a little bit of a sort of walk through time again. Like, I think it was mentioned a couple of minutes ago. I think that this space, especially when you think about claims generally with respect to fraud and waste and abuse and sort of these things, I think historically was a data science problem, right? You got lots of data together. You sort of put some data scientists who get paid a lot of money in a room. They'd work to have like a quantitative answer to what is the propensity for a potential claim to be fraudulent. And that sort of thresholding was a way that a lot of the large sort of insurance players would be able to give an indication for whether something would be worth pursuing, or go after and try to either eliminate some of that fraud and waste, or the other way of things, of really trying to find the right way to minimize the total amount or the effect that a given individual would have to deal with going to the doctor, or to physiotherapy. That used to be very much a data science problem, and sort of thinking about how to tackle it quantitatively. I think it's still true. I think a lot of the data science models here are instrumental, especially when there's high scale data in the telematics space. I just think that the actual way in which that you identify those sets of things has evolved substantially in the qualitative world, now that you have both LLMs and you have an ability to tap the unstructured data in a way that didn't require, or you couldn't have historically. You needed a structured data set, lots of different features, identify the 10 things. If you hit 10 out of 10, great, really, really high propensity. Now it's like the narrative around the case matters. The narrative around how it's reported matters. The narrative around if there's a lawyer added matters. And I think that the sort of space is evolving such that when we think about both the clients and the carriers, both as where we are sit in the middle, there's something to say beyond just the data science model. It's for every single case, here's the quantitative propensity, but here's all the other aspects of things that we're seeing around that case that makes it unique. And amusingly enough, I think I spent quite a long time, about 8 or 9 years ago, worked with a big European insurer doing exactly that, the ML version of this. But what was funny at the time was that the thing that we actually ended up having the biggest breakthrough on was identifying the links between bank accounts, the actual reporters of those claims, the ability to identify when they traded cars amongst each other, network fraud. You basically found the story and the pattern of all of the waste. It was well more than like what you'd put a threshold and get the answer for on the opportunity to pursue it a case by case basis. So I just think that this space is going to change a lot. It is changing a lot, but the opportunity to sort of influence it from the quantitative and qualitative side now really dictates the upside of what you can.
I think that's fascinating. And look, we've got another 10 minutes or so. I'm just interested in questions from the floor, if anybody has any, and hands up in time-honored fashion. Anybody's got any questions? Or we have to listen more to the Godfather.
Mm-hmm.
I'll just
at that point, people said I have to come in. Gentleman there, and I think there's a microphone going around. Do we have a microphone somewhere? Robert, could you just pass it to that gentleman? And then is there somebody over here who wanted to ask a question? No? Okay. So
I've got a question, probably directed at the rich data you're collecting all the time. Are you adjusting your pricing at the ground level or is it still a pricing at top end that's filtering down and averaging out?
Yeah, it differs definitely on client sort of maturity, I would say. So if you take someone like Uber, for example, they have just shy of 600 people in their risk and insurance team, which is more than I have. So they are incredibly complex and they're an incredibly mature business. What their issue is, so if you take I don't know, an Uber from here to Waterloo Station, right? They factor in a fixed insurance cost. That's what they have to do. Well, they want to get to. And after that trip, if they find out, damn, telematics said that was a much worse trip, the weather wasn't as good as what we said, we've actually lost money because the insurance should have been 40%, 65%, and I can't charge you retrospectively. So they want dynamic pricing. The difficulty of that is the insurance integration in dynamic pricing, which is as soon as you put it in, it filters into a very complex rating model. And I trust that model at that point. There's not many insurers that are there. And the size of that business is probably, I think Uber in the US alone are probably spending in excess of $2.5 billion on insurance. So you'd need an insurer that's willing to take a $2.5 billion bet on dynamic pricing. If you know a brave CEO, I'm happy to make a pitch. That's a lot. Yeah. So they have eliminated a lot of pure on insurance basis. They risk insurance base every single person. So they are doing it somewhat dynamic, but at point of transaction, I don't know anyone on the planet that's there yet.
Okay. Any other questions? Very good and very interesting one. All right. So look, I think what we'll do, I think it's been a fascinating conversation. I'll just hand to each of the panelists just to, and I put you guys on the spot, but it's fun. So just to sort of say the thing that, you know, they'd like everybody to leave with, whether it be something that they've said, whether it be something that one of the other panelists has said, as we think about how this space is, as Ben has already very clearly described, just how this space is changing so fast. And Chris, we'll start with you, and then we'll finish with the Godfather on the right.
I think when speaking from an insurer's perspective, I think a lot of insurers look at things like today and they say, well, my combined ratio's in the high 80s, I'm doing fine. And yeah, the competition might catch up and then I'll buy something off the shelf and I'll transform my business. The thing I like to remind people is the people that are working against insurance companies are using AI and they're using all these tools. And if you're not going great with your data, I can promise you they are. After this, don't look at it now, but if you look up, there's a site, www.pettylawsuits.com. I'd love to meet the founder of this place. They literally have a subscription service, and for about $40, you can file unlimited lawsuits. And it will give you prompts as to what these lawsuits are. Your coffee was too cold at Starbucks, you didn't like your McDonald's, file a lawsuit. Now, all that's happening here is this is AI agent versus AI agent, a colossal waste of money. If you're insuring a McDonald's franchise and you've got petty lawsuit, you might have your claims count might go up by thousands. It's just costing you a ton of money. So unless you're willing to utilize AI and embrace it, it is not about differentiating you between other insurers. It's protecting your business because this is what you're faced with. There's new risks and you've got to prepare for that.
Oh, fascinating. Ben.
Please don't sign up. We'll find you.
Well, you know,
Now we found out
know
that
this
actually
is out on the web.
then they're like, oh, don't sign up, guys. Don't sign up. It's a subscription model, only $40 a month.
A pretty good pitch. I think the.
By the way, this guy could sell absolutely anything.
Ben's the AI guy. He's like,
Yeah, exactly.
So I sit with a bit of a tech and an AI hat, obviously. I think the thing that I've been saying the last few weeks is that as much as the pace of the world changes as quickly as it does, I think fundamentally, you know, the advice is that every one of these institutions along the chain have to just start to build. Like you just have to. I think as time has sort of passed to date, it has the same sort of structural reality as the data scientists in sort of machine learning, where you need data engineers and you needed engineers and software engineers to build tech. That paradigm is also sort of falling. And I think what's really important is that, and to give credit to Jake and his team, I think there's a lot of engineering work that's gone into what we're showcasing. But I think the ability to sort of start from a base that is substantially higher without all of the primitives and schooling of software engineering historically, you can do today. And so I think, you know, as you think about how to learn here in this space, it's fundamentally just start. And if you start, you get the time gap between you and the next player next to you. That time gap monumentally compounds as time stretches into the future. And so I think, you know, the best thing to do, just like invest early, is basically start to build your AI function, not meeting the sets of people you'd historically need to do, but, you know, people like me that just get hungry and excited, go and do it.
Thank you, Matteo.
So the demo we saw at the beginning of our afternoon was something that overcome the traditional silos. We discussed this at the beginning of our roundtable. I would like to share the experience of one insurer that structurally leverage the data across their organization. So this insurer spent the past 4 years studying the telematics data, but also the sleeping data from the wearables of their clients. They discovered that a bad sleeping habit is correlated with a 30% higher probability to be involved in a crash, 36%. They went more deeper, saying, let's come, because, you know, who sleep bad typically have also a bad credit score and also drive bad. So there are co-correlations. They went further. They studied the different buckets of driving behaviors, so from the worst to the best. And they compared in each cluster who have a good sleeping habit and who don't. The difference is 15%. From June of 2026, this insurer integrates in their tariff the sleeping data. If the client share the sleeping data, they can have an additional, and the sleeping data are showing that they sleep well, they can have an additional discount. Think what a commercial auto insurance can do.
I think Lloyd should just do a Q&A with Matteo. And he could just tell all these unbelievably fascinating and weird and wonderful facts. Neil.
Yeah, well, I think certainly the insurance market as a whole needs to invest in the claims side of things as well. They've been investing in the underwriting side of platforms for a while. Claims need to be invested in as well, not just underwriters, but brokers, the whole market. AI is the way to go, and what Mark and the team showed today is a real big step in the right direction. When Mark first showed it to my team, and we were sitting there blown away by it, thinking this is just the almost a touching point. We need that. We need that to improve, to help the clients get what they want and help you as underwriters more profitability, you as brokers more profitability to get out there.
Great. Spencer.
You have something you want to say first?
I just was going to say I'm really screwed because I was 2% for the bad driving and I can't sleep for.
That's why.
So I just hoping my insurer doesn't get that.
Yeah, that's why.
So no, sorry.
Yeah, a couple, I think 2 related things. One, maybe a warning that, as I mentioned earlier, different insurers use telematics data very differently, especially on the program side. I think some check the box with it and they say, hey, I'm using telematics or I'm using Trucker Crowd, this or that. And, you know, I see them at target markets each year sort of going to a different carrier because, you know, it didn't work out for one reason or the other. If someone is using telematics, you know, dive into how they're using it, like we did today with first notice of loss. I got an email while we're sitting there from the Acrisure data scientist who said, hey, there's a field, you know, that I haven't gotten in the last couple of days. You know, they're paying attention to the data, ingesting the data, using it on a daily basis. So it's just sort of a warning for those who say, yeah, I'm using it, you know, probe on it. And the ones who are using it heavily, the insurers or the programs, you know, they're doing things that are maybe slightly invasive to the fleets. They're sending the fleets an email each week if their speed score drops below a certain threshold, or they're saying, hey, these 3 drivers are speeding way more than anybody else. But it goes back to what, and like that might feel slightly invasive, yes, slightly annoying, yes, coming from your insurer, but understanding or getting a gauge of the fleet's reaction is actually pretty telling. What Chris was saying earlier, a fleet who wants to, or a wheels company who wants to share data with you, who wants your feedback, is going undoubtedly to be a better risk in the long run if you're just going to stand them up against somebody who's got sort of the same characteristics but isn't going to take your feedback. So how an insurer uses telematics, and then how they drive that back to the fleets that they're underwriting, and then the fleet's response back to that is a signal in and of itself. And so if someone can explain that process to you and sort of their fleet's reactions to it, I think is actually a powerful signal for the people providing capital.
Great, thank you. And so just to finish off, introduce Mark Tuckman, just to close off today, and just thank him, Jake Bailey, the team from Acrisure Underwriting for all the work they've done. We saw their demo earlier. Absolutely phenomenal. They're fantastic colleagues under Ben's leadership from the tech perspective, but just more broadly from underwriting as well. Mark, how would you like to close off? Sorry for the jokes we made against you,
No,
but you did also make a few jokes about others.
I did. Got to be able to send and receive. I mean, but no, I got so many different thoughts from listening to everybody. But I think the journey of what we started here actually has been a lot in my mind in those horror dreams that when I do sleep. But it's and fundamentally it's great, and I love Jake's analogy around Iron Man and the suit, right? You give it was that was Ben's. Yeah, that's what I meant, Ben. You said it, Ben. Yeah, we know where we're going. So, but it's really about giving the people the tools so that they can be that Iron Man, right? And the visibility, because a lot of what's out there, if we knew it, we would make changes, right? I mean, that's just human behavior, and unless we didn't want to do the right thing, right? And so that we see too. But so a lot, and I went back and I said it when Jake's the web went down or whatever, the internet. We need to own it. I mean, if Chris is going to be on my program and support me, I got to own it. Who else will if I don't, or our underwriting team? So I think what we're trying to build is something that really needs to fix the industry, and I think, and Lloyd's has been around for long time, right? It's worked, and there's reasons why it works. I think we don't need to over-engineer the world. We just really need to get down to the really simplicity that the technology and AI can help us do. And I brought up the driver before. Still, I don't have my answer of how we get to the driver to make him care and motivated to do the right thing. And again, I'm one of the 2%, right? So I probably know more, see more, and I'm still, Jackie, don't use this against me. So I mean, but that's the reality. You're texting, you're doing 50 million different things, and
We all do this, right?
So, but how are we going to affect the change? And I think that's what we really got to use the technology for. The first notice of loss is one piece of it, right? And we didn't use the word agnostic, but I think it's really important. And a lot of you that support us heard me talk about this for the last 3 or 4 years, that just in the TPA world, we need to be agnostic. And what Jake's creating here isn't single threading ourselves into one. It's about the ability to choose the right partner for the right risk, or if it's a liability risk, a rapid response, all of those different things that, use the dashboard or the windshield, ding versus a fatality. So, and probably the thing that really just sets me off is to see an old claim come in that's been out there. It's like a mushroom in a closet, and it's something that we should have known and saw, and we didn't. So we can eliminate those things. Those are the things we can control. So
Great. Well, look, I think we're at time. Thank you all for coming. That is that. The end.
thank you, everybody.